Good evening, everybody. Load this up. How's everybody doing? What up, what up, what up? How y'all doing, fam? There's the chat box at 23 on. Should be closer to 35 tonight. Everybody can hear me live. Good, awesome. Awesome, gang. Well, welcome to lesson 5 here. I am super excited to get this one started. We are going to tie together a lot of our analysis. We're going to really put together a lot of what we've been talking about into, some formal rules and structure, which I think will be very helpful to everybody, right? So I'm excited about that. Let's go ahead and dive right in. So gonna close the question box for now. I will have Discord popped up in case Ron, who I believe is on, needs to reach me in the team chat for any emergencies, or I will check in the chat box periodically, but going to close that down as well so I don't lose focus on that. All right, so let's get started. So tonight the agenda is that we are going to review ORCL and SPX, the 2 trades taken a day. We'll do that after we've covered through some of this material. Then we're going to cover multi-time frame analysis, which is a big portion of our strategy, and then ultimately tie technical analysis together, as a whole. And I think that will be super beneficial to us, and really put it in the right mindset for us to really tie this all together, right? So tonight won't be the longest lesson on the earth. We're going to dive into the charts and make this super applicable, but the last 2 lessons were very beefy, almost 2 hours each. So this one, I believe, will be a little bit shorter material. But I'm excited to get into it because it will be very important, right? So the first thing I'm going to do is I want to define multi-time frame analysis because, again, like everything else that we've talked about, I'm sure that you on some level have heard and are familiar with multi-time frame analysis, right? And I'm sure that on some level, you've learned top down, right? This is probably how it was phrased to you in the past, was top down analysis. Always check the longer time frames, et cetera, et cetera. Yeah, that's not, it doesn't even nearly describe the depth that we'll go on multi-time frame analysis. This is our secret weapon, right? This really is our secret weapon. So there's 2 analogies that I will use to describe this one. The first one that I used last time was a houseplant analogy. And I came up with that analogy as I was sitting in Wendy's living room, trying to think of something that was a little bit different from the one that Eric, I learned from him, and a little bit different from the one I learned from Chris Holcomb, right? Just trying to come up with my own, but ultimately I want to take you through a couple different ones just to give you a clear picture of what we're going to be talking about with these different time frames. So for me, if you're thinking of a house plant, right, you're thinking of something, or for me, I studied agriculture, right? So any sort of plant, right? You want to be thinking of the roots of that, right? The biggest structure of that plant being the weekly chart. That to us is going to be the roots. That's for us is what is going to have the depth and what we always want to keep in the back of our mind. If the roots aren't doing well, right, then there won't be any short-term activity on the plant, right? Which is where we would find some sort of short-term trade, right? Then as you go to the more external pieces of the plant, you go to smaller time frames, right? We have the stems, which will be, maybe your hourly time frame. You'll go down to the leaves, which may be your 15-minute time frames. The fruits of your plant will likely be, the 5 or the 2-minute, right? So it's the ultimate point of what this analogy is basically to give you a real understanding that the longer time frames really, really matter, right? They really, really matter. So somebody told me that this was a little bit confusing to them and it's not the best analogy, and I completely understand that. So I also want to share this airplane analogy that I remember Eric mentioning, and also shockingly Chris Holcomb, otherwise known as Kansas, for those of you, actually I don't think anybody in here will know who that is, but the same analogy that he used to me, which is that think of different time frames like you would think of a different airplane flight, right? So if you're flying from the east to the west coast, from California to New York, right, that full flight, that entire, coast to coast nonstop flight is going to be your weekly chart. It's going to encompass everything, right? But not all of us are going to be on the nonstop flight, right? Some of us are going to be on a, multiple stop flight. And the way that we would compare this to our stock charts, right, is that larger overflight is going to be our weekly one, but we're going to drill down into some of the connecting flights that you're going to have to take from California to New York, right? You might have to fly from California to Alabama first, right? Which will be a little bit longer than halfway. right? And that would be your daily time frame, right? Then you drill down into the 30-minute flight that you're going to take from Alabama to Atlanta, or whatever the case may be. You'll nail down into these smaller time frames, but it's really, really important to understand that what's different the way that we're going to be using them is that in the past, you might have learned that top-down analysis is crucial and that you might have learned, focus on the longer time and stuff, but you have to be watching all of them together. You want to be using all of them in conjunction with each other, not just checking the top ones first and then going from there. To me, you'd be doing yourself a massive disservice if you aren't considering all of the details on all the time frames, right? So let's dive into what do we use each of these specific time frames that are the most common for us, that I use and the most common on a day-to-day basis. What are we going to be using them for? Right. So again, we want to consider the larger picture above all else. And even if you are someone who your trade average winning trade time is like 5 minutes, most of the time you take a 2-minute sell setup and you're out within the first 5 minutes. You just take your profit quick and you run. Even if that's you, you need to be familiar with the longer time frames in order for your analysis to work, right? Because if you catch yourself trying to take every 5-minute buy or sell setup without understanding what's going on the larger frames, man, oh man, are you going to get chopped up and you're going to get stuck in a whole lot of setups. To me, this is where our edge really, really comes from. So on the weekly chart, this is always our first priority, especially when we're looking at swing trades or gearing up our general plan and thesis for a stock, is we want to be clear on the weekly chart. Even if it's intra-week, even if it's not the end of the week, we want to be looking at the weekly chart and examining how is that contributing to our analysis. So that is always our first priority, is the weekly. Always, 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 always. Beyond that, we'll go down, drill down into the daily chart, which is our individual, which is our bread and butter for our individual candle analysis. For me, I am very good at looking at an individual candle and saying, okay, what is going to come next based off this bar, right? And based off the subsequent or previous bars, what are we looking at for subsequent bars coming from that? And the daily chart is really my bread and butter for that. While it's applicable to all different time frames, the daily for me is something that captures enough data where I'm able to really take a good look at an individual bar and look at what could come next from a bar perspective, right? As well as trend analysis. The trend analysis on the daily is going to be very key for daily buy setups, right? Daily sell setups is going to offer us a lot of opportunities to catch large intraday moves, right? For me, I'm not about that life catching, 50-cent or a $1 move on a stock like NVIDIA, or a $3 or $4 move on a stock like Tesla. Right? I want $10, $15 when I'm trading Tesla. I want $20, $30 when I'm trading Tesla. Right? And in order for me to get those types of risk rewards and those potential moves, it oftentimes comes back to the daily chart and our individual bar analysis. All right? Excuse me. Then we'll go to the hourly chart. That's just sort of, again, drilling down on these flights, on these trends. The hourly is our key to it all. The hourly for me is where we're always watching it. If you ask for an opinion of a stock, or you give your opinion of a stock without having checked how the hourly looks, I have an issue with that, right? The hourly is like, we fucking love the hourly. The levels come from the hourly. The trend analysis can come from the hourly. The hourly is like the secret key to it all. A lot of people look at a 4-hour chart. I want to be honest with you, I don't remember the last time I looked at a 4-hour chart, like ever. I just not even in my vocabulary anymore. I don't have anything wrong with it. It's sure in like crypto, it would even have like more benefits than in the stock market. For me, the hourly works, so we use the hourly, right? The hourly is the for some reason, the phrase that's popping up in my head, and it's just because I watched this show called The 100, but it's the key to like the metaverse. It's the key to everything, right? It's the fucking hourly chart. All right, so then we'll go out the 15-minute, and what I use that for the most is what I consider the 5-minute plus, right? Like the 5-minute is great for intraday trends and finding entries and exits, especially early in the morning, and managing positions. The 15-minute is great for intraday trend analysis. Like after the first hourly close, or after especially the second hourly close of the day, most of the time we'll flip to the 15-minute chart to look for 15-minute buy and sell setups, because those will give us a little bit more credence, a little bit more weight than something like the 5-minute, right? So for me, the way I look at it is like, it's really the 5-minute plus. It's the 5-minute on steroids. It gives us a little bit of extra information, actually a lot of bit of extra information, 2x with or 3x, whatever it is, of the 5-minute chart. So it's our 15-minute plus, or excuse me, our 5-minute plus. And I love, 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 love the 15-minute chart. I also have a smoothie tonight, gang. Health and wealth. Let's fucking go. So then we drill down into our main two that we will use for entries and exits in trade management, and that is the 5 and the 2 minute frame, right? So we will show a ton of examples of this, but I think it's really important for you all, rather than for me to just dive in and start talking about a chart. So I'd be like, okay, here's the weekly, here's this. Then I think what you all would do would kind of be similar to the previous times you've learned top-down analysis or pyramid analysis or multi-time frame analysis, whatever you want to call it, which is where you start by just checking the weeklies, but you don't actually understand what you're looking for. So I want to give clear definitions of what exactly we are looking for on all of these, right? So let me type a few of these just so we have it written down as well. This is for intraday by cells, T2 levels, trend analysis. So, right, the weekly is our first priority, especially looking at swing trades. The daily chart is our bread and butter for individual bar analysis and trend analysis. The hourly is our key to it all for levels and trend analysis. 15-minute is our 5-minute plus. We look for intraday buys and sells. I'm going to put in parentheses there, especially post 8:30 PST. 5-minute is our main management time frame, and the 2-minute is for our early analysis entry and exit. Right. So I don't want you all to get too stuck up on using the one or the, I don't use the 1 minute at all, but I don't want you to get stuck up on using the 2 minute for everything. The 2 minute is nice, especially early on in the morning. But if you only take 2 minute entries and you're not aware of how the 5 minute looks while you're out there taking a 2 minute entry, you are going to eat a lot of stops, right? Because it's 2 minutes on a chart. There's so many 2 minute bars in 1 hourly candle. There's a shit ton in 6.5 hours of trading action. So there's bound to be a lot of buy and sell setups, a lot of failures patterns, and a lot of opportunities to try and take trades, right? So if you just focus on that, you are going to end up forcing way too much stuff. All right. So again, the larger timeframes for us will always reign supreme. However, all timeframes are always impacted of each other. And the part that was the most interesting to me when I really started to piece together how to use MTFA, multi-time frame analysis, is when you compare how the movement on one time frame is reflective of the picture happening, the larger picture happening overall, right? Like let's, for example, imagine that something is in a weekly uptrend, right? If it's in a weekly uptrend, in order to develop a pullback on that uptrend and to get a pullback to develop a buy setup, it would need 2 or 3 red bars, right? Usually we look for at least 2, preferably 3, right? Within those 2 or 3 weekly red bars, there are 10 to 15 daily candles. So if those 2 or 3 on the weekly are red, you can bet that on the daily, we might have flipped into an intraday downtrend in order to get that weekly pullback, right? So then if you drill that down into a daily chart, let's say the daily's in an uptrend, right? Right? In order for that daily just to get a pullback, it's not flipping into a bearish trend. It's not flipping into something, you know, that is going to be immediately short. But in order for it to get to a pullback, the hourly chart would then flip into a downtrend. Right, so it's important to understand how these things tie together. This continues down and down and down, right? And we talked about this a little bit on voice chat yesterday, right? And we'll cover that example again a little bit later tonight, right? But if you are stuck on 5 or 2 minute frames sometimes, you might be ignoring the fact that we in larger frames are in a different trend than what's happening on the 5 or the 2, and it's just a pullback on a larger frame, right? It's just a pullback on a larger frame. So this will continue down all the way into all time frames, right? A 2 minute chart can go into a downtrend just to get a 5 minute pullback to the opening print or to the level, right? And that 5 minute chart is never actually in jeopardy, or it might be in jeopardy, but it never actually loses the uptrend. It's just that the 2 minute chart goes into a small downtrend for a very short period of time in order to allow the 5 minute to have enough bars to pull back, right? Do you see how these time frames are starting to tie together? And it's like, holy shit, right? Like a daily flip into an uptrend might just be a pullback on a weekly chart, right? And let's look at an example of this as we speak. right? So if we flip to the SPY daily chart, wow, I have this written out over here. Spoiler alert, right? If we flip to the SPY daily chart, I want to mark up one specific area for us. You can see we have our first pop in the chat box there. First pop all night. If you knew how many times it took me to understand, that is a really good explanation, Jake. Thank you, Gabriel. Appreciate it. Because honestly, it took me a little while to understand as well, right? Gabriel has taken Eric, who's one of the teachers, one of my mentors at previous courses as well. So it took me a while to understand this, right? But that is, if it clicked for you right away, I apologize that we kind of went on for a little bit, but I really wanted to hammer it home because it's confusing for a lot of people. And I'm sure not all of you have clicked in it yet. It's going to take some time, right? So let's go ahead and dive back in, right? So the point the area I want to highlight is right here and right here, right? What is technically happening on this chart at this area and at this area? And there's a few different ways you could answer this, but there's specific ones I'm looking for. So go ahead and answer in the chat if you can. I'd love to see some answers and just see what you all think. What happened during these two boxes? Pull back on a downtrend, then range. Okay. I don't think that's wrong. Consolidation on the higher time frame. Okay. For me, what I am looking at, right, is this ends up being an LH, right? This ends up being a lower high. And the reason I'm hoping you all notice we don't have a P there is because it does get confirmed when we snap to a new low here, right? But this, even though it's a green hammer, actually does end up acting as our lower high, right? We take out, so we trigger a daily sell setup here. We push down, we get the new low off the daily sell setup. Then we rally and we actually take out this lower high. Right now, we aren't in a confirmed uptrend by any means there, but from our basic rules of uptrends, downtrend, trend analysis, this technically is a higher high, right? We break over and get closes and consolidation over a previous lower high, right? So that in and of itself is the daily chart attempting to flip into an uptrend, right? This is why for me, I thought there was potential that we could get a little bit higher up, maybe up into this area, and I'll explain why even more in a second, right? So we flip the daily chart into a potential uptrend. Now, I don't want to call it confirmed or anything yet because we haven't really made any progress above the lower high, nor do we have a very set or anything, a sort of higher low, which is the structure I would want for a daily trend flip, right? But does it make sense to people to understand? Does it make people understand? Does it make sense, everybody, why we would consider this the chart on the daily attempting to flip into an uptrend? Right? Does that make sense to everybody? Yes, sir. Okay. Get a few more yeses. Yes. Okay, cool. Perfect. Right now, what we just talked about, right? A pullback on a weekly trend would require, I'm just going to change this to make it so that applicable to whether it's an up or a downtrend, right? So a pullback on a weekly chart would require the daily chart to shift trend. Right? This is the daily chart attempting to shift trend, attempting to push back into a daily uptrend. Now, if we flip to the weekly chart, this is nothing more than a weekly pullback, right? And let me get all this stuff out of the way now so we can just see the bars by themselves and see what they see. Right? Now, this is only a 1-bar rally, and I'm going to explain that more in a little bit in a second, but at its core, on the weekly chart, the same way we just did analysis on the daily chart and the rules that we decided with the higher highs and the higher lows and how we said it's technically trying to flip an uptrend. This is technically in a strong ass downtrend, right? Like, for lack of a better phrase, we in a strong ass downtrend, right? We have broken higher lows. You could make the case that we tried to get a failure to go lower here, that we held the uptrend. You could try it. We have a clean weekly lower high or potential lower high. There is no questions asked. We are in a weekly downtrend. And this weekly downtrend, as it currently stands, does not flip until over 458, or I should say, before we had this data on the chart, it did not flip until over 458, right? So it had, so when we start asking the questions, Jake, you know, why did you, I wasn't super bullish last week, and I didn't like swing long or anything, but the question in my head sort of asked like, hey, Jake, why were you thinking that, hey, we could rally up into the 430 area, right? Well, in the weekly chart, all we had done with this green bar is get a 1 bar rally within a weekly downtrend. Totally a possibility, especially with this follow-up bar, that we could have gotten another push up towards maybe the 430 area. And would that have changed jack shit from a trend perspective on the weekly? No. No, it just wouldn't have, right? Now, we didn't get that push up. That's whatever. It's not like I lost money trying to trade that trade to this. It's just what I was looking for, right? Once we broke the range to the downside on the daily, it was kind of clear where we were going. But this is why I was looking for the daily chart to potentially get a little bit more of a rally up, right? Is because the daily had flipped to an uptrend and the weekly had room to trade a bit higher before setting a potential sell stop, especially knowing that we only had a 1 bar rally. That being said, what's one of the things that we literally just mentioned? What's one of the things that we literally just mentioned about this weekly downtrend? It's strong as fuck, right? For lack of a better term, it's strong as fuck. So a 1 bar rally was really all the steam that bulls had, and any sort of trigger on the weekly sell setup, which we see here, was not to be taken lightly, right? It was not to be taken lightly. And we see a big move down from that weekly sell setup. So does everybody, sorry. You're good, Kaylin? Okay, and everybody can see my screen? For some reason, it also just paused my screen share. No worries, no worries, no worries. Okay, cool. So this to me is a perfect example of multi-time frame analysis coming into play in like a picture, you know, great, fucking really clear way, right? Really, really clear, right? On the daily chart here, we have this attempt to flip back into an uptrend. However, are any of the longs that we took during this week A++ or our highest quality of setups? No, is the simple answer, because we do not have what we will call time frame confluence. And if you've ever learned the MACD or the RSI or anything like that, you can understand that my reason for calling it time frame confluence is a little bit of a huge jab to all the indicator traders out there who use confluence between a million different things, when in reality, I believe all that you need is the confluence of time frames. You need time frames aligning together, right, to paint you that picture, because that is when your trades get the most follow through, right? We want our time frames greens, right? Now, we will always end up using, I don't know how to spell agreements. I don't know. Okay. I don't know if that's right, but whatever. We want our time frames in agreements. We want them to be agreeing with each other, right? So were longs potentially looking appealing, especially after these big trend bar days? Yeah, they had potential on the daily to make a run up here, but on the weekly frame, we were still in a strong downtrend, and every long should be treated as a hit and run or a light position size or anything, because we don't have those time frames to agree with us, right? Big thing. And I hope that really was a very clear example to everybody of multi-time frame analysis and how we would use it on a daily and a weekly, and what we would call the really a battle of the time frames, right? A battle royale between the time frames, because we had the daily trying to flip into the uptrend, and the weekly just a rally and a downtrend. Let me note that as well. Battle of the time frames. The longer frame usually wins, right? And my favorite part about this type of analysis is that, again, it really is like, oh gosh, when I figured this stuff out, it to me was like so night and day because, and I hope that you all have sort of gotten this feeling over the past, few weeks, just 2 weeks really of using the new strategy, but even more so after tonight is that the shit makes sense from like a structure perspective of like why things are doing what, right? Like shit makes sense, right? Like it makes sense to me that this weekly chart was just getting a pullback within its strong downtrend, right? The daily chart was trying to flip into an uptrend, but when it couldn't hold the daily uptrend, the weekly took over and the sell side kicked in a vicious way, right? But all these things are actually starting to glue together a little bit, right? And it's starting to be like, okay, this isn't random. Like there's rationale behind all this. Yeah, earnings catalysts and news might be the cause of stuff, but now I can actually justify why these moves happen and say, hey, there's a technical reason for it because we flipped this trend here, or we were rallying within a downtrend. We were doing this, we were doing that. And the level system gives us the tools to piece together where exactly we think these things might have an opportunity to go to, right? From a target perspective. So everything is just give me a yes. And if it's not all clicking for you yet, do not worry, because of course we're only halfway, you have more. But is it clicking a little bit more with everybody, right? Everything's starting to click a little bit more like, okay, this isn't just random EMA crossing shit. Like it's okay, I can actually watch these charts and actually start to understand like what is happening, right? Like I can actually start to understand so to me, it was fucking night and day. So I hope that you've had sort of a similar realization so far, and we continue because there is much more to be had tonight, right? So the other thing I want to talk about on multi-time frame analysis before we dive into a few more examples will be where do we find the ideal buy and sell setups from each frame, right? We talked about this a little bit earlier on, but I want to kind of give some clarity to this because for me, I use the buy and sell setups as multifaceted tools, right? Multifaceted tools. We are going to be using them for both our specific entry and stop loss and all that, right? We want a 2 or 5 minute ideally buy setup to take, a trend break on the hourly chart or something like that, right? We're going to use the 2 or 5 minute for that entry. However, in terms of our larger theses as to what's happening, we are still going to be using those buy and sell setups just on the longer frames, right? So again, this is where these time frames are going to come in and start working with each other in conjunction. For example, on this SPY chart, it should be very clear to everybody this is a very clean weekly sell setup trigger, right? Very clean weekly sell setup trigger right there, right? But are we going to enter, a day trade with an entry with a break below, 406 with a stop above 417? No, right? No, absolutely not. Maybe you can enter a put swing trade there. That would be valid to take a swing trade off of a weekly sell setup if you're the type of person who likes to swing short. I am personally not big on swinging short beyond a night or two. So I wouldn't have taken that. But that it would be a valid reason to take a swing. But if we're doing day trades, which is what most of us all do, are we going to use that weekly frame for the entry and exit? No, right? But that is going to be our larger time frame. That is going to be our larger time frame way of sort of putting this picture together of what's happening. Saying, okay, we're triggering a weekly sell set. This is going to get some sort of strong follow through. If I can find an entry on a 2 or 5 minute chart aligned with that thesis, then it's going to give me the opportunity to catch a weekly move, right? A move that would occur on a weekly chart, right? And for me, I'm kind of kicking myself for not taking the weekly sell more seriously. But in reality, it was because of the CPI stuff that when it triggered, I didn't take it because I didn't want to swing short into CPI. But fuck CPI, pardon my French, right? Like fuck CPI. This was the trigger of a weekly sell set. Now, it always could have failed. A strong CPI could have reversed back to the upside, right? We could have failed the weekly sell, and that would have given us a little bit more of a rally. So that's always a possibility, right? But like we kind of acted like as a group, like CPI, was like this gamble of like what might happen and all that. I'm gonna be honest with you all. I don't really see the bullish case following a bar like this, right? If you line up everything, and thankfully none of us, I didn't swing long in the CPI, I don't think. No, we swung the Tesla puts. We made like 380%. But it was just the spreads. So I didn't swing naked puts, which I kind of wish I did. But again, I'm okay with me having not done that. But if we look at all of the different things that we had lined up here based on our system, right? We had the weekly chart, or excuse me, the daily chart here failing to hold the daily uptrend, which it had just flipped into. So it shouldn't be failing to hold. That is our trend analysis on one frame, right? Then we drill into the weekly, and we had a weekly sell setup triggering at that time, right? That's another piece of our thesis that we want to look at, is a weekly buy or sell setup, giving us some sort of potential entry or trigger, on a longer frame, right? So those two pieces of information working for us. Then we drill down further into our system. What's next? Individual bar analysis, right? This candle here, if you ask me what comes next on this candle, right? It's like, if you just truly think about what comes next, given the fact that we broke down out of the daily range, given the fact that we triggered the weekly sell, and again, just as importantly, given how this opened, tested inside the daily range, then broke the daily range and closed that low very ugly, that candle gave us all the reason we needed to be short against it, right? Again, I follow my rules, so I don't gamble on things like that, because we always could have had a gap over red or something like that, right? And if we did gap over red, in my opinion, it would have been a big move up. But that being said, the reason I'm talking about this is because fuck CPI, fuck FOMC. I don't give a shit what they say tomorrow, right? Like, I literally don't care. 75 basis points, 50 basis points, 100s, I don't think it matters, right? All that it matters is that's going to be a catalyst, and it's going to push the chart to do one thing in one direction or another, right? Again, then you drill down into some of the more basic rules and principles that we have when we talk about support and resistance, right? We've talked about one being the reverse. Old resistance should be new support. That was true, but at this candle, it told us that this was no longer true. You also look at the knock-knock principle. The more times we test a level, the more likely it is to break and break with power. We had 1, 2, 3, 4 tests of this level, or not. I'm not looking at a specific hourly level here. I just, whatever the bottom end of this range was. And when we got the break, it had a powerful move, right? So everything that we've talked about in the first 4 lessons, barring minus the actual specific level, because I don't want to go in and drill down, I think it was 406.14 or something like that. But barring that actual specific level, every single thing that we've talked about so far, tie it all together, right? You tie it all together, right? So let me pause there for a second and check the chat. But everything we're talking about, I'm hopeful that when I was talking in lesson 1 and lesson 2, everybody about how this is very calculated and I have a plan and everything's going to tie together very nicely. This is why. I'm intentionally trying to weave these things together all at the right time. So it's like, oh, holy shit, this makes sense, right? Check the chat real quick. Maybe that's why Chip ran to those puts. Yeah, so he just took I saw the same thing. He was just willing to take the risk. I wasn't with CPI, right? And again, on hindsight, I wish I hadn't even considered CPI, as I normally wouldn't have, but I can't. Hindsight's a bitch, so who cares? You use hourly level support on the weekly. Yes, every level comes from the hourly chart. Every level, unless we can't find them, which a solution to finding them would be going back in time to using on demand and being able to find them that way, or using trading views that will allow you to find the levels. But yes, look, all of our levels will come from the hourly chart. Those will be our specific reference point. Now, I might use a zone, right? Like here, for example, in this whole little zone of whatever, this to me, or no, not even that, but like, I don't even know. This isn't a good example. Like NVIDIA, like down here, I would consider this a weekly support zone, but the specific level I would be watching for would come from the hourly, right? So like I said, I don't use supply and demand zones, but I will look at like general areas as reference points on those longer time frame charts, especially like a weekly. Okay, right? So let's move, let's hop back here. Kendall, I saw your question, but I'm gonna hold off on it now for now, just to piece back in. But remind me, I will answer it, or Ron will be my hero again. But we will get to you. All right. So now let's tie everything together and create some sort of firm and concrete rules. Sorry, smoothie time. I'm gonna over this because that's thick. Okay, so tying it all together, right? Here are our 4 rules of our triangle offensive system, right? The first rule of our offensive system is that we want something to be near a level or the open as a reference point for us, right? And I hope that you all have seen that play out over the past few days. If you've taken the homework assignment of watching charts without necessarily trading, then I'm sure that you have seen probably literally hundreds of buy and sell setups, especially if you've been on a 2-minute chart, right? Hundreds of buy and sell setups, right? So just those alone ain't enough, fam. It's not enough. You need to be using a level or the open as some sort of reference points. Otherwise, you're going to get your risk reward will ultimately end up being clouded, in my opinion, because you're going to be trading in between levels in the middle of those, as opposed to taking something off of a level or using the level as your reference point, right? We want all of our trades, or at least the majority of them, to be with the trend, right? With the trend. Now, it's okay to take something, you know, that might be in a smaller time frame, a 2-minute downtrend, right, as it's pulling back and as you try and take a flip there, as the 5 minutes triggering a buy, right? But in general, we want all of our trades to be with the trend, and I'll define this as at least the intraday trend, right? Want all of our trades to be at least with the intraday trend. In my opinion, it's okay to be like, we're in a weekly downtrend. That doesn't mean we can't look for longs on bounces and stuff. There's going to be some good opportunities to find scalp longs, especially in a market that's extended to the downside, right? But we just have to remember a few different things, right? Even if we're in a weekly, if we're fighting a weekly downtrend, right? Our trade has to be with trend on a 2, 5, preferably at least 15-minute, maybe hourly chart, in order to justify why we are fighting a weekly downtrend, right? We have to be at least with the trend on those smaller time frames in order for this to be, you know, in order for us to maintain our discipline and not be fighting the overall larger trend too much, right? So the other thing, the next step within our system, sorry, I'm hungry, so my brain's slowing down a little bit. When we are entering a trade, and I have buying trend here, right? When buying trend flips, you could also be using the same example. When shorting trend flips, when shorting a trend break to the downside, we wait for a buy or sell setup to trigger, right? And then we use that for our entry. Shouldn't need to go too much more in depth on that. We all should be familiar with those. Above all else, gang, we want time frame confluence. We want our time frames to be agreeing on all different levels. And I'm going to now dive into a little bit of a review after popping out. Actually, I'll go through the next slide first. Okay. Ron's all fucking over it. God, Ron, good man. I love you, sir. I owe you dinner again. So we're going to cover one more slide, and then I'm going to dive into the FDX chart today, which honestly was a big miss for me, like a huge miss, because it did exactly what I wanted ORCL to do. And I was in a little, I'm fine, but I was in a little mini tilt today, just because ORCL didn't do what I wanted. And I was kind of married to that one when FDX actually looked a lot better on the weekly. And it was a miss for me. It was a big miss. So we'll cover exactly what that was, though, because all of these things would have really, really lined up nicely on that. So in order to kind of wrap up and tie together the last knot of our day trading strategies, right? These are really the 3. If you ask me, Jake, what are your day trading strategies? There's like 3, right? There's like 3, right? One is the level to level system, using the hourly trend breaks for some sort of move from one level to the next level, right? That combines with all of our remember, each one of these strategies is fully inclusive of all of our rules in our triangle offense, right? So the triangle offense really is our strategy. But if you're, for some people asked me for more specific names and stuff last time. So using level to level is one of them. And then really from there, it's just strength and weakness, right? Is something have relative strength intraday, even though it doesn't have a level on it? Can I use the opening print or some sort of really strong trend to buy a pullback or to take a buy setup off of this or to short a pullback in a rally in a downtrend or sort of 15-minute sell setup, right? But using strength and weakness is it. Like these are the three, right? Like you don't need anything else, right? Like you really don't. And in my opinion, you could actually be a SPY only or a futures only trader using this entire system. I personally don't recommend that. Or it's not that I don't recommend it, because if you do it and you love it, like fucking stick with it, right? But for me, I found more success in trading a basket of names rather than locking in on only SPY. Sorry, the chat is popping up, so let me triple check. But rather than locking in on only SPY, because for me, I find that there's some days where SPY, especially when we're in a slower uptrending market, SPY won't offer nearly as many opportunities as some relative strength names, right? But these are the three, right? Level to level, using relative strength and using relative weakness. That's from a strategy perspective. As a wise man once said, you know, that's it, homie. That's it, right? That's it. Again, all of these three, though, are fully encompassing of our triangle offense, right? Our triangle offense has much more to it than just these four rules, but these are the condensed rules and specifics of what you need to be looking for. Like if you need to have a checklist before you enter a trade next to your desk so that you don't overtrade and take stupid trades, I want you to use these four rules as your checklist. All right? Okay, let's dive in a little bit. Give me 1 second, everybody. I'm going to flip to my swim chart. Okay, let me stop share. Okay, fantastico. You can all see my Thinkorswim screen now, correct? Perfect. Okay. All right. So let's first take a look and do what our system teaches us, which is to drill down into the FDX weekly chart, right? Now, on this weekly chart, you can see that we have clearly, and I'm going to clear drawing set. I'm going to mark a level at 221.18 because that was the level that was played today. It's a big, big miss for me, and I'm pretty salty about it, to be completely honest with you, right? But if we are looking at the trend on this weekly chart, we have a HH there, then we pull back, and here at this point in time is where we shift, right? Because we have broken this higher low and gotten closes beneath it, right? We have then set an LL here, right? We then rally up, set a little bit of a lower high, not a major pivot though, kind of pull back, go into a little bit of a trendless area where the weekly tries to flip back into an uptrend here and then ultimately fails that flip, reverting us into a new downtrend, keeping the strength in this downtrend, breaking into a new low here, rally up, triggers a sell setup, pushes down, right? All I'm doing here is just following along with the highs and lows of the trend, right? And what you'll see here, really the only point in time where FDX wasn't like quote unquote clean was when we did try and flip back into a weekly uptrend here, right? By breaking over this previous lower high and by setting a higher low here, we did get at a brief time a quick flip into a weekly uptrend. It just failed, right? And when it failed, rather than holding a weekly uptrend, we did end up pulling back and establishing the new sort of downtrend, right? So up until today, we are in a weekly downtrend. And last week, even though this is a bit of a range here, right? It is a big range. We do have a weekly sell trigger there, a attempted pop to new highs that could act as a PLH, a potential lower high. and it sells through those lows. So today, when FDX is slated to open over about 221.18, which is the level that we are watching for it on the day, what is potentially happening on the weekly chart? Anybody? Feel free to throw your answers in. No wrong answers. Well, there are some wrong answers. There might be a few answers right ones here, but what am I looking for? When we were slated to open up today at 221.18 or right around there, what was potentially happening to the weekly chart? Well, Danny, we were in a bit of a downtrend prior. Robert. Ding, 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 ding. Gold star to Robert. You get an extra point for this one, brother. Great. Exactly. A trend break, right? By breaking over and potentially clearing this area, we were looking to potentially shift the trend, get it back into a higher high, and this could flip our weekly chart, which is the biggest one, right? The largest one that we generally, we don't generally watch monthly charts, or I don't, right? Flip that weekly chart back into an uptrend. So that could potentially lead us to a big move, like we talked about on SPY just a few minutes ago, right? A 2-minute sell setup or a 5-minute sell setup or a 5-minute trend break is good for like a 5-minute move, right? You can expect quick pops, all that. A weekly trend break is usually good for a strong move, right? Then you flip down into the daily chart, and not only are we gapping over red, but we are rallying right into an area where if we take it out, we flip the daily chart back into an uptrend as well, right? So huge, huge potential here on this flip, right? Sorry, I had my back hurt for a second there, right? So a big move on this daily chart. And I'm going to explain why exactly I chose not to take it and what my mistake was versus ORCL. So FTX here, we have the hour, the daily and the weeklies flipping into uptrends. Get this the right style. We have the hourly flipping back into an uptrend. Now, what did I want on FTX? I wanted an open above 221.18. I wanted an open above the level, because then we could pull back to the level on retest. It would just, the open above to me gives me a cleaner, a more trustworthy idea that we're going to get the continuation as opposed to an open beneath the level, right? Because it's like, it's right there. Why wouldn't it just open above, right? So for me, I was watching two different names, FDX and ORCL. ORCL got the open above both of the two levels I was watching, 71.72 and 70.8, right? ORCL got an open above both of those levels. And so for me, that took a little bit of priority in terms of what I was watching to find an immediate long on, right? The mistake for me came on that. For me, this 5-minute bar of the day, kind of similar how a minute ago we asked ourselves, hey, you know, what comes next after this bar on the SPY right here, right? Like just logically, what comes next? And for me, while ORCL gapped above the levels, it did not, one, it did not hold above the levels. And two, this first bar of the day was so tough that for me, I should have really asked the question, what comes next, right? What comes next on that particular chart, right? Now, the bigger miss for me, even though ORCL opened over the level and that gave it justification for being more intently watched than FDX, its reaction was not nearly as powerful as FDX at the open. So FDX should have taken my attention from that. So for me, the system and the rules kind of backfired a little bit because I was more focused on ORCL. But it was my fault because I rushed into an ORCL rather than trying to find an entry on FDX, which was clearly working more, right? Which was clearly working, more. The other miss is, let's take a look at the longer time frame on ORCL. ORCL is not a name that I normally trade every single day. It is a gap up or earnings or a news type of play for me, only when it looks really, really good. So I was flipping when I was doing my scanning this morning. I had checked it out on the hourly and I was like, ooh, we got a nice potential hourly trend flip here, good levels that we could gap over. Ooh, okay, yeah, bet, let's do it, right? What I failed to check on OFCL was the weekly. This, while a nice weekly chart, is still in a strong downtrend. And where we were slated to open wasn't like at all as pretty as FDX, right? FDX is slated to open and flip this trend here. ORCL is slated to open and still have to fight, you know, a bigger chunk move to get over this sort of area here. And it's coming off of a lower low, right? It's coming off of a lower low here. So we still have, it's a stronger weekly downtrend at the moment in ORCL than it is in FDX. And for me, that was a little bit of a result of sloppy scanning at market open, right? Because ORCL was a late addition to my list. And by the time I added it to my list, I had overlooked the weekly on it. I had seen the weekly on FDX. And I kind of just assumed that ORCL had a similar weekly. It was an oversight today that ultimately, I believe, probably cost me about $7,000 or $8,000 based on how much I would have made on FDX, probably closer to $10,000 based on the loss I took on ORCL, trying to force that trade as well, right? Being that I took an entry when we were beneath the levels, right? So for me, sometimes it was just, you know, sometimes we make mental execution errors, and that was one of the things that happened today. But I really am hopeful that ORCL, I'm really hopeful that ORCL, or excuse me, that FDX for, I'm very hopeful for FDX for all of these ones. You understand all of the time frame confluence that we just talked about. So yes, Justin, I will dive into ORCL, the 2 and 5 here. Does everybody understand why time frame confluence, which was our biggest thing, one of the biggest rules we wanted above all else, why all of that came together today on FDX? Does that click? Does it click in as to why? And that example on the weekly chart, the daily chart. Awesome, right? We had the hourly flip, right? You drill down into a 2-minute chart. Didn't have a flip into a downtrend on the 2-minute chart, but did have pulls backs into the level, right? All right. So this is really the buy setup I should have taken. And that's really the only thing I should have done on the day right there is that's a buy setup. Let's go back and establish, and I wanted to do this anyways. Right? We're going to use a level or the open as our reference point, right? We want to take our trades with the trend. So are we above the level? Not only are we above it, but are we using it as a reference point? We want to use it as a reference point, right? So here we're above it and we're right at it. We can take a buy setup on the 2-minute off of that level, right? Are we with trend on this FDX 2-minute chart? Yes. Are we with trend on the longer frames, even down to a 5-minute chart? Yes. 4-hour, yes. I don't even look at the 4-hour. I just click that accidentally. Weekly, yes. All of those line up, right? When buying trend flips, buying a trend flip, wait for a buy setup to trigger. Buy setup, trigger, boom. Your stop loss on this trade would be over 220. Even if you take it over 223.11 and stop under 220.50, you're risking about $1.50 on this with 230s as upside targets. And I forget what the actual levels were. The risk reward was clear and good. And above all else, we want time frame confluence. This one checks all 4 boxes, except the only thing it didn't check for me is I wish it had opened over 220.4. And then the other reason I didn't take this one is the options chain was very funky at the open and the spreads were very wide. So I'm okay that I didn't take it, but it was I wish I had this is the kind of trade where if I had had my main margin account funded at the time, I could have seen myself taking 1,000 shares of FTX here with a $2 stop loss, risking $2,000, and that would have been like a money trade, right? Okay, I see a few. I know there's a few different questions I want to get back to. On the 2-minute buy, is that the third green candle correct as it broke over the second one? So again, there's a few different. This was where one of our shorter. I created a rule for you all to help protect you in the short term, which is that wait for the color. We want to buy setup to be that color change, right? So based on that rule, Kaylin, yes, you would wait for us to be buying over the third green bar right here, since that's the one that broke over this high, right? As you get more experience with the screen time and recognizing the setups, the timeframes, everything in relation to its level, I would have been okay with you having taken the entry over this area right here. I would have been okay with that, especially given how it looked on the top 5-minute frame, because it is still technically a buy setup. It's technically a buy setup when it breaks over, especially given that this one has a little tail at the level. I'm okay with you taking this break over. But as you continue to learn, and see the setups more and more in real time, then I would be more okay with you taking this like sort of a color change one, right? Taking it over this one. For now, try and stick, or at least while you're learning and watching, try and stick with same colors, right? So you want a buy setup would be an uptrend, a pullback to the level or pullback in general, establish support, and take out the high of the previous bar. For your training wheels rule, you would want to take it as we break the color change bars high, right? So you would want to take it as we break this green bars high. Okay, there's a shit ton of questions in here, so please bear with me, everybody. First one is, what if FTX just tests 221.8? Would you take shorts? No, I would not have taken shorts on this, which you can look for on a short would have been something very similar to this price action, just in reverse. Right? Like something like this. If our level was right here, that's kind of where it was, right? You would be looking for something like this, right? A short would be a break beneath, a rally up into the level, and then a sell setup that fails it, and you could take it in that example there, right? For me, though, I'm not a huge fan of fading big gaps up over, especially over a red bar. So you could have, if you like shorting failures and stuff, that you can have more success with that than me, but I wouldn't have done that. But Jake, don't you say you would rather take a trade when a candle goes from red to green? I'm not, Danny, I'm a little confused on what you mean by that. Because for buy setups, in a perfect world, I like green to green, right? Like in a perfect world for a buy setup, I would prefer, and then this one didn't really offer any clean ones here today. But let's see if there's something. Go back in time a little bit. I prefer, right? Like, oh God, nothing has had a clean trend in a while. I would prefer, say, for example, none of these are, this isn't like a great example. I'm just going to use the green to green bar setup. I prefer, because even though this is still in a downtrend, we're just using the candle bar as example. I prefer for this green candle, Danny, to be my signal bar. And that I can take entry on the break of that green bar's high, right? So again, this isn't a buy setup, this is a downtrend. I'm strictly just using the candles here for the example, right? Imagine we're coming off of a strong uptrend, right? My preference and ideal is let the candle close green and then take the green bar's high, break, right? So that's my preference on a buy or sell setup. Okay, see Ron's over a few of these questions. Kendall, cat has strength against the market, so it's a good sign. Yeah, exactly. So yeah, Ron was on top of that one. But so Gabriel, the daily for me, it doesn't mean that we should only trade shorts because the weekly is in a downtrend, because The hourly and the 5 minute, 15 minute will still have different trends within them that we can trade. However, you make a great point because the daily and weekly is in a downtrend. What does that mean for longs, everybody? What does that mean? What's the phrase I'm thinking of right now? And I just mentioned this kind of earlier today. Daily and weekly are in downtrends. Smaller time frames have some flips. We're okay taking longs here and there when they, or especially with relative strengths, when they present themselves. But we're in a weekly downtrend, right? No multi-time frame confluence, no swings, or it would have to be a very big relative strength then, especially. Exactly, Kaylin. Longs are temporary in these because overall bias is short. The phrase I'm looking for is hit and run. Longs in this conditions are hit and runs, right? Permission and granted to take them when the setups are valid in presenting themselves and really giving you a good opportunity, but they're hit and run entries, right? We do not aim from the moon on long entries with our normal position size. Like if you're putting on a YOLO and you're like, I think we're like, that's different, right? But if for our main trades, the bulk of our trades, we're not going to be aiming to hold a big chunk of runners, right? We're going to be trimming earlier. We're going to be more strict with our entries, so to speak, right? There's going to be hit and run entries. I've been using only the 5 minute for setups, not the 2 minute. I see 2 minute setups better than 5 minute. Kendall, for now, especially as you learn the basics, I don't want to say learn the basics, but as you become more familiar with the strategy, there's nothing wrong with sticking with the fives. Like you said, there's going to be more failure patterns and more failed sell and buy setups on the 2 minute chart. So the 5 is going to give you a little bit extra layer of confirmation. There's nothing wrong with that. As you start to see them more and more time, like I can explain this to you all until I'm blue in the mouth or whatever that phrase is, right? I can explain this to you all for so long, but no matter what, a big portion of this is going to come from screen time, right? A big portion of this is going to come from screen time. If you are able to recognize and watch these buy and sell setups for 5 months, 6 months of a year, then then you are going to be able to see them a lot more easily, right? And then all of a sudden you'll be able to start to recognize when is a 2 minutes buy and sell setup look like it has some more strength, it's more valid, it's inside of a 5 minute buy setup, et cetera, et cetera. You're going to be able to see all that more. So the screen time will be, very, very beneficial to you all. Okay, really quickly, I saw one thing that said, Nomi said, I'm getting confused on what time frames to look at now. And there's two potential answers to this question. The first one is that you want to be paying attention to all these, right? And these are what we will use them for, right? So remember to refer back to this slide for what we will use them for. Of course, I'll post the slides right after. But the other answer to your question is all of them, right? All of them. Whatever is the main chart that I am watching for the day, I have pulled up on my main Thinkorswim grid, which I have it posted, but I'll send it out again tonight. I have 3 or 4 of the same stock charts, but just on different time frames. So I'm watching the hourly, I'm watching the 5 minute, 2 minute, and the 15 minute, and the daily, all at the same time. Right? This is our edge, being able to see all these different time frames working together, understanding their different roles within an uptrend, within uptrends, downtrends, and our priorities, right? So, Nami, I'm not surprised that you got a little confused by all the different talk of time frames tonight. There's no doubt in my mind that you are not the only one, and I was for sure very confused. Like Gabriel mentioned earlier tonight, he's had a similar lesson to this, watched it multiple times, I'm sure, and tonight might have been the most that clicked for him. So this is going to take you a few rewatches. It took me a lot of rewatches and a lot of studying and questions for sure, but I'm hopeful that the core principles all make sense. That all makes sense of sort of what we're looking at from these different timeframes. I think that will be crucial. So don't get too confused. Refer back to this slide and then a rewatch or two, and I promise it'll click a little bit more. The other question I saw was from Luke, and I did want to clarify this a little bit, which was that on FTX, he sees the lower high as this 241.22, right? And I saw Justin say something that you could use the bodies, not the wicks. For me personally, for the higher highs and higher lows and all that, I think the wicks are important one there. But the other thing is that if we move this, just in the way, or Luke, the way this triggered here, triggering a weekly sell setup, right? That gives us a pivot up here. That gives us a PLH up here. Now, it didn't break down and act as a confirmed lower high, right? So you're right. In my opinion, if you were to compare this lower high with this lower high, this one is probably more important, but this was just a weekly sell setup that triggered and a failure to go higher that triggered, right? So by reversing above both of those and getting this sort of clearance above these areas, again, whether or not you call this an up or a downtrend is kind of, I mean, it's tough, right? Because this lower high is still right here, and this is a more major lower high. But to me, this break over these previous areas, or the attempt, knowing that we could look to break over that with targets above, that would have been where I would really have my focus on. So it's not the cleanest of trend shifts, you're right, but it is a solid trend change in my opinion. A flip back into, or at least the first leg of flipping back into an uptrend. I feel like the best way to understand multi-time frame analysis is to think all the different time frames talking to each other and having an agreement on price and showing the trend to you. Yeah, it's that's not a bad way to describe it. For me, the airplane analogy made the most sense to me, right? And that's a good way to think about it though, Julian. It really is that the different time frames are going to be telling you different things and giving you different pieces of the puzzle. And the longer ones are going to be the pieces of the puzzle that hold the most weight. And the shorter time frames have to change trend in order to move the longer ones, right? Like in order to, in order for this weekly chart at the time to get a pullback within its uptrend, right? The daily chart had to flip into a downtrend. And we can't scroll back that far, but the daily chart flipped into a downtrend at that point. The SPY, in order to get this rally that we got on the weekly frame right here, we flipped the daily and the hourly, the 5 minute, all the smaller ones did flip back into a smaller time frame uptrend, right? So they're all working together with each other, and that is going to be where our edge is, right? Time frame confluence. Also, Nami, I realized that I was telling you to refer back to a slide while I was still on my Thinkorswim screen. Sorry, ADD brain. Let me stop this share for a second, revert us back to our slides so you can see the slide that I was referencing when I said that. And again, I will post these slides in 2 minutes when we're done. Yeah, this is what we would use the various different time frames for. Absolutely. Sorry about that. Okay, this is the last question I'll answer for now, and then we'll wrap up. Again, this lesson wasn't too long, just over, just about 70 minutes. Nothing near our 120 that we had come close to last time. So the further down the downtrend on the daily would be the bigger green candle on the weekly reversal. Yes and no, because kind of what I talked about earlier on. Earlier on, I mentioned that until we broke back over this area on the SPY, we would technically be in a weekly downtrend, right? Because we wouldn't have a higher high until we get over there or until we get more data. More data being this rally right here. This is now a lower high. So when the weekly chart gets back over that area, the weekly chart will then have flipped trend back into an uptrend. It doesn't mean that we can't stop and fail these resistance levels, and it doesn't mean that, oh God, sorry, I keep doing that. Pause. Okay, I need to, what was I saying first? Okay, so as I was saying earlier, right, we have this weekly area up here, right? This was what we mentioned earlier on, saying that until we broke back above here, we would not be able to get back into a weekly uptrend, right? Because that is our LH confirmed, right? Now, or until we got more data. Now we have more data. We've pushed down, we've pushed down, we've pushed down, we've pushed down, but we've rallied up and we have established a new LH, a new lower high, right? So like Ken was mentioning, the further we go down, isn't it? The bigger green candle you have to get back up? Not necessarily, right? Because now for the SPY, what we need to do to get back into a weekly uptrend is to take out this lower high. Doesn't mean we won't fail these areas. Doesn't mean we're going back to all-time highs right away. But by the same logic, we would be, as us on the daily chart, right? By that same logic, we would be flipping back into a weekly uptrend as we did up here, giving us the opportunity to make that next leg up, right? Do the lower highs, high highs have to be exact candle price? So people, if you're talking with some people very, very specifically, they are going to say that it is to the tick the wick, right? For me, I'm more of a general area type of guy. Because guess what? If you're a dick for a tick and you're super specific, you would have said, oh no, we made a higher high here on SPY, right? And it's like, well, did we really though? Like even the bodies though, did we really, even if you use the bodies, did we really make a higher high on SPY? Like I guess, but it failed, right? And so for me, this is a lower high, right? So for me, it's more of a general area for me. That's a really good question, Josh. For me, it's just more of a general area. If you drill down to like a 2-minute chart though, I would probably use a more specific wick as like the highs and lows. Would be a good answer. That's a great question. Okay, everybody. That's all I have for you tonight. I think this was an awesome lesson, very filled with a whole lot of information. From here, where we go is we are going to shift a bit away from strategy, right? Because this is a conscious decision I made, everybody. I packed, in my opinion, what we could have stretched into 7 or 8 lessons into the first 5. Mainly those last 3. Those last 3, if I was trying to just give you the bare minimum, gang, I would have stretched those last 3 trend analysis / candle analysis, levels, and multi-time frame and failures. By all that, I would have stretched that into 6 or 7 lessons, right? If I was just trying to give you the bare minimum, right? Here's my rationale on it. We do lessons 1 and lesson 2, risk management, a little bit of psychology, all that. We crank everything strategy-wise out in those last 3 lessons. Now, there's nitty-gritty stuff, there's specifics, gap over red kind of stuff that we will talk about more, right? So we're going to fine-tune this a little bit. But from a core strategy perspective, we've covered a lot, and that's most of my strategy. You all have most of the sauce now, right? So rather than giving you an hour each and kind of nickel and diamond and trying to do the bare minimum and this and having this be our last lesson or second to last lesson, what I did this was the same as the first class, just a little bit different on number of lessons because they had 10, right? Was slammed it in to 3. Now what that leaves us with for the remainder is, because we have 3 full lessons left, right? We have 3 full lessons. We're going to take at least one full lesson to talk about options. Some of you probably aren't going to be like the happiest campers on that if you're familiar with options, all right? And we're not going to do all the basics. I'm not going to spend 20 minutes talking about delta or anything like that. This is all stuff that you all could find online and all that. So I don't want to, I wanted to focus more on strikes. We're going to spend one lesson though covering options, how I pick strikes, expected moves, implied volatility, all that. But I'm going to slam that into 1. I'm going to slam that into 1 option lesson. That's going to leave us with 2 left, right? One of them is going to be very routine, psychology oriented, right? But I'm leaving wiggle room for whatever we as a group think we want more emphasis on, right? And part of that could be me diving into a 5-minute chart and breaking down every single thing I see, whatever we think we need. And I'm going to keep, right now, I think you all are picking up on the strategy pretty smoothly. And I don't think you're having as much trouble with it as the last class was on some pieces of it. So the last class, we have refocused a lot on strategy during the last lesson or the last lesson and a half, right? Or 2. For you all, I'm thinking that we'll be able to do more strategy psychology on one of them, routine, stuff like that. And then leave some stuff open-ended for where we have room to cover more of what we think we need more practice on, right? So we'll talk about that more. Let's not do a big discussion on it right now, just because we're about to hop off. So we'll talk about that more as we go, because we have options on the queue for next time, and we might need a lesson and a half for options. But this is intentional, right? We went 2 hours the past few times very intentionally, because if we don't do that and I drag these out, then we don't have wiggle room for what do we need as a group to talk about, right? What do we need as a group to talk about, right? So we'll spend more time on it, right? We'll do that. But I hope I'm going to ask you all a question. Let me see what this is. Yeah, we'll either do a poll or we'll just do a general discussion, after the next lesson or something. So no worries. Bullish on futures after hours. I don't know, Justin. I mean, we're kind of just still in this larger, the daily chart was kind of a range day. It did get a little bit of a stab underneath the previous day's low, but then it rallied back. Excuse me. So futures technically have room to get like a bit of a rally, right? I don't think it's like super sustained or anything. But I wouldn't hold a whole lot of weight to it. I don't mind getting a pop up to 3,800 to short again. I'm cool with that too. So, all right, gang. Really quickly, last question, last favor that I have for me. If you don't mind, just pop some yeses or yas in the chats. And let's fucking do it. Yeah, good lesson. We happy? Let's fucking go. Hell yeah, everybody. I love this one. Thank you for that. I really appreciate that you all do that. And seriously, we are through 5 lessons now. It's been thick. It's been a whole lot of information. I really, really hope that you all are happy, right? I made a point out of lesson 1 and 2 to ask you to bear with me, because everything's structured well. I hope that you agree with me that I tied everything well in together, because I think tonight was kind of like the culmination, a little bit of like, oh shit. All of these things are going to start to click a lot more and more now. And I hope you see that I hope you see that reflective in your own understanding of the charts. Okay. All right, gang. I love you all very much. Have a great rest of your night. Okay. See you tomorrow. We go to battle yet again.